Thanks, Peter, and thanks to the Institute for the invitation. It's very gratifying to be here. We're frequent visitors here and part of the Institute's very important role in stimulating debate in these areas. I'm very pleased to be active on both sides of the podium many times a year and to be engaging with the audience. What I want to try and do is summarize a fairly technical and detailed analysis very, very quickly and really skip over a lot of the technical detail and the numbers and really talk about the implications that we think are important for this. But we'd be happy to answer any questions that come up on the more detailed side and on the points that I want to bring to this group that I think will be interesting for further discussion. Earlier this year, we commissioned McKinsey to do a marginal abatement cost curve on climate change abatement opportunities in Ireland. The first time a completely comprehensive such analysis was done in Ireland. In order to do that, we had to enlist the help of very many people, including many people I see here today. Principally, I want to thank the ESB, who provided financial support for the study, but also a lot of technical input, for which we were very grateful. And I'd also like to thank those who are here and those who are not here. Of the close to 100 people we sat down with, experts, stakeholders, government departments, state agencies, technical experts, academics, who gave of their time and their expertise to provide the data to allow us to do this study. And the fact that we had to meet 100 people, which included, I think, 7 government departments and half a dozen state agencies, reminds us of the point of this exercise, which is to bring together a very wide-reaching topic that cuts across many traditional responsibilities, many areas of expertise, and attempts to bring that all together under the banner of the climate change opportunity for Ireland. What's our opportunity to abate emissions in all sectors of society? And that's both the strength and the weakness of an analysis like this, because the point is that the results of a study are presented in the form of a cost curve that puts everything on one page, which is very much the strength. You're comparing like with like, you're using the same metrics. But of course, it's also the challenge, because you have to simplify, you have to rationalize, you have to make a lot of working assumptions. And I think that anybody who's expert on any particular topic I'm going to speak about today, we could talk in more detail about the research agenda for the next 10 years to refine those assumptions, to get further into those things. So this is very much a work in progress. This is the first complete cost curve analysis for Ireland, but it's very much only the first, and I think there'll be many more research agendas and analyses to come out of this. I think many of you have seen these kind of cost curves before, but for those of you that haven't, the object of an exercise like this is to examine every opportunity for carbon abatement in Irish society and to quantify it in 2 ways. One is to put an extent of abatement. How many tonnes of abatement opportunity does that particular opportunity afford? And secondly, what will be the cost of that abatement opportunity in euros per tonne of CO2 equivalent? So every rectangle on this curve represents a technical opportunity for CO2 abatement, which I'll talk about in a little more detail, and also tries to reflect a cost in terms of purely CO2, and I'll come back to that point because we're only costing certain dimensions of this here. Just a couple of quick caveats. There are working assumptions, some of which I'll explore in terms of the economic assumptions behind this. Probably the most important point to make this point is that we're only exploring technical opportunities on this curve. And the example I use to illustrate that is you'll see some elements of this curve that talk about the abatement opportunities associated with, let's say, improved engine technology in cars. You won't see the equivalent analysis done for, let's say, modal shift or demand management, sort of in terms of fewer car journeys. That's the object of a different exercise, and we are doing some work on that. But at the moment, this can be seen as, if anything, as a lower bound of the extent of the opportunity, because it concentrates on the technical opportunities, largely because of they're the ones that are easier to solidly quantify. But there's certainly more work to be done on the behavioural side, and that is not at all to be neglected. This is, in fact, one of the cost curve results that I'm showing you here. There's a number in the report, and I'll refer you to the report a number of times for more detail. This is the main output of the study in terms of the summary report. This, in fact, 40 pages. We managed to squeeze it into 40 pages. It was a major achievement. And I should acknowledge that Neil Walker is here, who's my co-author on this study and did an awful lot of the technical analysis work that goes into it. For those with an appetite for more detail than I'm going to give, I would refer you to these. For those with a bit of a perversion, I would refer you to the 200-page technical annex, which is also available on our website, that goes into tremendously more detail about all the geeky stuff. And it's because that exists that I refuse to answer any very complicated questions on the issues. This is one of the main resulting cost curves that we did from the analysis, and I'm just going to start with this and then go into a little more detail. This is our analysis of the abatement opportunities across all sectors of society by 2030. It's based on so many economic assumptions, principally oil and gas prices, which I'll come back to. But it's effectively lining up from the cheapest to the most expensive in carbon abatement terms. What are the opportunities for carbon dioxide abatement in Ireland over the period between now and 2030? As you can see, the total extent of abatement runs to about 30 megatons. Now, there's issues about what the baseline is. The baseline that we use for this is not exactly the same as the policy baselines that you'll see, let's say, in the European targets. With this study, it separates itself a little bit from the policymakers' targets to look at society as a whole and to look at a longer time frame, look across all sectors. So the baseline effectively is action not taken, or a business as usual type baseline, which has some subtleties in some places. But effectively, as opposed to taking all of these actions and availing of all these opportunities, they represent a total abatement opportunity of about 30 megatons. Most of the ones we look at here come under about 80 euros per tonne in terms of savings opportunities. Some of them come in a little higher. As you can see from here, over 40% of them come in at negative societal cost in terms of typical examples of these are energy efficiency, where there's an upfront cost in, let's say, upgrading a building's efficiency, but there's a return on that investment through the energy savings over the lifetime. And on a societal basis, there's a question of who pays, who saves, but on a societal basis, those kind of efficiency measures in particular save more than they cost upfront when you look at them as a whole over the whole period. And in Ireland's case, which is slightly higher than the international typical curve drawn, we show about 42% savings opportunities that come in on that side of the curve. And that largely reflects, the good news of that is because it's, in fact, Minister Ryan said last week, it's largely to do with the fact that we were such sinners in the past in our building stock and in many areas of efficiency that the extent of untapped potential in energy efficiency remains larger here than in other states. On the other hand, all of this is about technological innovation, and again I'll refer to this point, particularly some of the issues in the power sector and in other technological innovative sectors such as new sources of electricity, new types of vehicles, things like that, are about technological innovation. That has a couple of implications. One of them is some of the bigger opportunities in the power sector in particular don't really kick in between now and 2020. Carbon capture and storage is a typical example of that. Some of the new sources of energy like ocean, and even offshore wind are not going to be making a major impact between now and 2020, largely because of the lead times for those that are relatively mature, and some of them just aren't mature. And questions about when carbon capture and storage will be ready for deployment is still very much an open question. So there are questions of timing here, which does have implications for meeting certain targets. I'm going to concentrate my remarks on the 2030 timescale because it allows for that richer discussion of some issues that are not quite ready. If you look at the report, we do present a 2020 curve as well, which is obviously of interest to policymakers in terms of the immediate targets. And we also disaggregate ETS and non-ETS, which clearly has policy implications in terms of the emissions trading target versus the rest of society. I'm not going to really concentrate on that for now, unless it particularly comes up. Just going through the sectors very, very briefly, if I may. The opportunities in the power sector obviously relate to the deployment of renewable resources, principally wind at the cheapest level, followed by some of the more advanced technologies, ultimately wave and tidal, which will still, according to this analysis, be relatively expensive by 2030. But of course, that's a difficult thing to estimate, and our ability to estimate the learning curves there and the future costs will get better as we go on. I should say that because we deliberately disconnected ourselves from the policy targets in this study, if anything, this particular curve underestimates renewable penetration between now and 2020 because it actually works on a market replacement logic rather than a policy-driven logic. So I think, in fact, by 2020 we'll see a much longer curve here and we'll see higher penetration than this curve represents. This focuses on, for instance, when a peat station comes to the end of its natural life, we'll replace it with wind power. It doesn't, factor in extra wind that will undoubtedly come onto the system sooner than that, and for policy and market-driven reasons other than natural replacement. Buildings is where a lot of the efficiency opportunities lie. There's language here that I won't dwell on if you don't mind. There's things like the split between, let's say, certain types of lighting deployment in commercial buildings, certain types of lighting in residential buildings, and then language like splitting efficiency into package one, which is basic measures on building upgrades like insulation, and then more advanced measures like actual major fabric upgrades. And we just split them into categories. And again, the full report will tell you exactly what's in each curve and in each rectangle. we were talking about lighting at another event the other day, and it's very clear to us that if there's one area of technology that's ready to deliver major efficiency savings now, it's lighting. Joe?
Could I just say I might just SEI to come in to do an energy audit? Back at you.
Fine. Well, we'll be here next week, and one of the things I'll tell you is I was in Bewley's last week in Grafton Street, and they have imported a new type of halogen candelabra bulb, which is the first time it's deployed in Ireland because they have particular candelabra. It's not our chandelier, it's a bit like yours. So there's now somebody setting a precedent for you there. You know, you buy a CFL now and it's like a quarter of the energy use of a conventional bulb. But in a couple of years' time, when LEDs are really mature, we're talking about replacing 100-watt bulbs with 1-watt bulbs. So you can imagine the revolution that's coming. Even that's a little far away. And again, most of you have heard this example. Stop me. Well, don't stop me. But we recently replaced lighting in our building and again, I use this example because we bought something that's off the shelf. It took us 2-week lead time to order it. Wasn't particularly expensive. We replaced conventional boxes in a ceiling with exactly the same shape and size box in the ceiling. They had better bulbs in them, better reflectors, better controls. They use exactly 1/5 of the electricity of what we replaced. And that was purely mature, off-the-shelf technology. There are huge opportunities in lighting, particularly in business environments, factories, offices, shops, all that kind of thing. And it's a major focus of a lot of our efficiency work at the moment. Transport, again, on the efficiency side, there are a number of negotiated agreements between the car manufacturers and the European Union that give us some degree of predictability of developments in car engine technology. They're categorised into bundles that relate to things like improved, reduced rolling resistance, some technological changes to the engine, some streamlining of car body shapes, things like that. I won't go into the detail. And clearly, out in terms of the longer term, but very much growth areas for the future, everything from biofuels, hybrids, and all the way into pure electric vehicles. I thanked the ESB earlier for co-funding the study. I'll now also thank them for giving us a lift here today in their 7-seater all-electric SUV, which is out on the streets driving around, showing that these things are now possible and fully there. This vehicle does 160 kilometres on an overnight charge. ESB use it for ferrying their people around and sometimes other people. And, that area is only going to grow and grow. And again, I would emphasise that in 2009, it's pretty tricky to estimate what the cost of an electric vehicle is going to be in 2030 and what kind of contribution it can make. So we use a lot of conservative assumptions here. We're always trying to protect ourselves from being accused of being over-optimistic. So these are very much lower bound estimates, and I think as further study is done, we'll be able to give more refined views on how these things are going to come to pass. I think this curve underestimates the potential in industry because it focuses again on what we know. We know there are certain improvements that can be made in motors and motive power, certainly in areas. It focuses a bit on cement because largely that's where the data is. There's quite good international research on replacing ingredients and fillers in cement and also using new fuels in cement. It also talks a bit about process optimization, but I have to tell you, the work we're doing with large industry here is showing that these things do not reflect what is actually possible in process redesign. We have case studies now coming out on the ground of factories redesigning their process in Ireland and halving their energy bill by intelligent process design, by bringing in Six Sigma systems, new ways of heat recovery, and just fundamentally rethinking the way they make stuff. And again, these curves find it hard to capture that kind of thing because it's real how long is a piece of string stuff. If you find a breakthrough way of making your white powder, then how do we predict that going into the future? And that kind of innovation is hard to capture here. But again, I think as we do further work on this particular sector, we'll see a lot of new growth there. And again, at low cost and negative cost because it's all about efficiency, it's all about energy cost reduction. I'm moving outside of SEI's bailiwick a little here, but the point was to do a comprehensive exercise on all sectors of society, see where the contributions can come from. Agriculture, again, is a very, very tricky one to do because there's a lot of opportunities that we actually looked at and don't appear on this curve because we felt the science isn't there yet. One, we're not sure that they really will work, but secondly, the estimates of the contribution of certain changes in the way we do our agricultural practice are very, very early, quite tentative, and we're not going to speculate beyond what we feel is reasonable. So again, I think with more research, and indeed some of the research that the Institute is doing at the moment, we'll learn a lot more about what's possible in agriculture. Similarly, in land use, I think that clearly the big opportunity, and that's very logical, very simple, simple to understand right now, is planting trees. Beyond that, there are other issues in terms of changing forestry management, changes in some use of land, like in peatland. But really, right now, what we know most about is planting trees, and that's a clear opportunity for Ireland as it is for elsewhere. That's the whistle-stop tour of the sectors. And as I say, I'm happy to talk about it in more detail, but really I'm not here today to explore every assumption, and I'm quite happy to admit that we had to make a number of working assumptions on the science of these measures, on the extent of the opportunity for Ireland, on the pace of deployment, on the future costs, we're right out to 2030. All of these things involve a certain amount of judgment. I think we got the best brains in Ireland together to help us do that, but I'm quite happy to admit when we do it again in a year or two time, we'll be refining some of these assumptions, and we'll be working with all of you on an ongoing basis to do that. So this is very much a first pass at what is quite a broad exercise. Again, the point of doing a cost curve like this is it's a very communicable tool. It's not the most robust piece of analysis on any single opportunity, but it's the first comprehensive presentation of them all together. So we can now look at this, we can get a sense of the big picture, we can compare things against each other on the carbon basis. And I'll say a little bit more about how we think these can be used in just a minute. I did say there were some economic assumptions behind this. We look at societal costs. We don't look at who pays and who benefits. And, a classic example is the efficiency. Who pays for the installation and then who saves over time. We don't think about that. We just say it costs this much to society and society saves this much. And it's for further work. And there is further work going on the detail behind all that kind of thing. We make assumptions about discount rates. We make an assumption about future prices, all that kind of thing. The key sensitivity here is what you assume the background price of fossil fuels is. Again, being conservative, the curves that I've shown you so far for 2030 assume that oil is $60 a barrel. I don't think many people are predicting oil is going to be $60 or lower in 2030, or at least they're brave if they are. And so to compare that and to put a bit of sensitivity on it, we did run the analysis again at oil at $120 a barrel and moving gas and other fossil fuels commensurately. If I just ask you to burn this onto your retinas there for a second, look at some of the key energy areas, so onshore wind, second generation biofuels, some vehicle technologies, and now compare them then when we rerun the analysis, $120. Everything the business case has gone clearly better for. Some things have flipped from the right-hand side right over to the left-hand side. Everything over there on the left-hand side has come way down. The societal cost business case for every single opportunity improves dramatically when you assume a higher oil price. And you can see that the difference, $60 to $120 in recent history terms, is not a dramatic change, and it's not the full spectrum of possibilities between now and 2030. And yet you see a fundamental shift in the outcome and in terms of the business case for all of these actions. And again, this is about opportunity. A lot of these areas are things that we should be doing now. We should be preparing for the future. Nearly all of them come in at costs less than the likely penalties in meeting targets or the likely future price of carbon, even if you measure them on carbon alone. And that's a very important point. Nobody should go home with this curve and say, let's start from the left and work all the way until we're finished. And nobody should say, that one's worse than that one because it's over there. This measures on the cost of carbon dioxide only alone. It doesn't measure on energy security or on reducing import dependence, on job creation, on fuel affordability, on alleviation of fuel poverty, on competitiveness to business, on other externalities and other environmental emissions. It purely uses what is now a commonly used metric for comparison, euros per tonne of CO2. That's all it does. Every single bar on this curve has a wider economic analysis behind it in terms of what the wider costs or trade-offs or opportunity costs are, and more particularly what the wider benefits are in terms of some of the things that I mentioned. And all of those need to be factored into decision making. These things don't stand alone. This is one way of comparing. It's useful because it's one of the few tools you can actually compare everything on with, but it's dangerous if anybody thinks then that's now a way to compare everything with everything else and make decisions purely on that basis. Let me make a couple of points I'd like to make that stand out for us. All of this stuff on the left-hand side, now I'm sure we'll have some discussion about how real some of those numbers are. Transaction costs aren't in there. We assume certain discount rates. That might affect some of the depth of some of those bars in terms of saving. But we firmly believe in SEI, and I'll say why in a minute, that there are huge untapped efficiency potentials in Irish society in many sectors, particularly in buildings, but in other areas too. if you just do this, just to convert these numbers into something a little more tangible, and again, the work that the Institute has been doing in this area is very helpful in this regard. If you were just to upgrade every house in Ireland that needs better insulation, better windows, better attic lining, all that kind of thing, and pay for all of that, and then accrue all the energy cost reductions that over the next couple of decades that come from that, you're 10 billion euros up on that transaction. If you do the same thing in commercial buildings, you're 6 billion euros up on that transaction. So, and that's using insulation that you can get in woodies today. This isn't about waiting for innovation. This is about proven deployment technologies that we're deploying out there now. The issue here is how to get that and how to unlock it. Even if you argue about exactly that extent, I really don't think, well, I look forward to it, but I really don't think anyone can say there is no efficiency potential out there in society. We know it from modelling exercises. We've done other modelling exercises that reaffirm that. But also, it's our bread and butter in SEI. We go out every day, we talk to householders, we give them grants to insulate their attics, we give them advice on how to cut down drafts and cut down their electricity bill. We do the same in business. In the last 2 years, our advisors have gone out to 2,000 businesses of all sizes in Ireland, from people spending 100 million euros on energy to people spending 10,000 euros on energy. Every single case has shown opportunities to reduce their energy bill by becoming more efficient. Typically at least 10%, often 30%. Often on an almost zero cost basis, leading then to more advanced measures. People often come away from the work we do with them reducing their electricity bill by 10% overnight because they didn't realise they were leaving stuff on at the weekends. They didn't realise they could just simply swap out those bulbs for better bulbs and so on and so forth. And the data set we're gathering is huge in terms of what's possible, in terms of proven measures. I mentioned lighting, and I won't mention about a dozen others I could because you were kind enough to invite me here. But there are huge efficiency opportunities that are technical in nature because they involve buying new equipment or using it in different ways. But actually, the unlocking issue is more organisational and social, and it's about how businesses manage their energy, how they think about it, whether they can actually find the bill when you ask them, even though they're spending 200 grand on energy and they can't actually find it in the post, which is really a common occurrence. And then more typically on our side, how do we make it happen? What are the key barriers on a societal level? Awareness is a huge thing. Many businesses don't realise they can save their money. Many householders don't realise how easy it is to save money. Where do I go for trusted advice? Some guy's putting a leaflet in my door saying, I'll save you €200 a month by installing a widget on your roof or whatever else. How do I know that's trustworthy? Who can I go for advice to? And of course, finance. I'm talking on this on a societal level. Society benefits from doing this, but also often two problems arise. First of all, the owner of the building doesn't benefit because it's the occupier who's getting the energy savings. But probably more crucially, you have to pay now to save later. That's the crucial problem with energy efficiency. If I want to insulate my house now, it'll cost me 5 or 10k. I'll save 500 quid a year. It's a no-brainer in economic terms, but I have to have the 5 or 10k that I'm willing to commit now, and I have to be willing to wait for those savings. And a lot of the work we're doing, including Joe Curtin's excellent green print report, is exploring how does the state intervene in those market failures to try and capture that potential. And it's about new ways of financing. For instance, it has been done in elsewhere, and it's been done here in the past, where maybe the utility pays for your building upgrade and gets the savings off your bill over a period of time. Banks have an appetite for investment in this area. Many companies working out there are looking for, the ESCO market, the energy service companies, the energy solution providers. The European Investment Bank has an appetite for this. So there must be, and we are looking at this very intensely now and looking to roll out new strong actions in 2010 on how we can correct some market failures, change the nature of financial incentives here and the nature of financing so that some of this efficiency potential is delivered on a much greater scale than we're seeing now. We're going to spend about 40 million euros this year giving grants to homeowners who want to upgrade their heating systems and their insulation. That will deliver maybe 20 to 30,000 home upgrades. It'll prove the technologies, it'll build the intelligence. Me in my housing estate will see my neighbour doing it. I'll have more confidence. We'll have guys registered who've proven they're capable of doing the work and they won't make a mess of it. We'll have the numbers more solid. But ultimately, a grant programme does all that. It builds the concept and it gets you going. But a grant programme can't deliver 1 million home upgrades in Ireland. That's got to move to a new mechanism. Very quickly, green tech and Ireland's opportunities is very much in vogue at the moment. And this curve tells us how great that opportunity is. Ireland has very significant competitive advantages in the green tech world. Two that come to my mind are, first of all, Ireland has a size and a nature that is amenable to change, in theory. Any of us who are sometimes described as quangos or bureaucrats sometimes get it in the neck in terms of our ability to adapt. And I accept that we're not doing all we can, and poor old business is facing problems in getting permissions, understanding market stability, understanding how to innovate. But at the same time, in theory, we can crack this nut. We can get everybody who wants to talk about electric vehicles at a national level in one room and get them talking about the solutions. We can get the ocean energy community in a room of about this size and get decisions made. Not very few countries have that to offer, either their own entrepreneurial sector or companies who want to come in and lead the way. Also, when you look at these opportunities here on these curves, be it things to do with smart grid and smart metering, control systems, advanced software, that's all of Ireland's strengths. So the green tech revolution and everything that goes with it fits with Ireland's capabilities. It fits with communications technologies, with sensors, with monitoring, with software, with knowledge-based services, with advanced innovation in services and products. And that makes us very well positioned to capture all of these opportunities. Everything I show you here in this curve is in the UK's curve, it's in the Dutch curve, it's in the US curve, it's in the OECD curve. If Irish companies crack solutions to unlocking these opportunities, they don't only get to sell them here, they get to sell them right around the world. This is the future of business. Getting carbon out of the things we make and the services we sell is where business is going. I don't know that we've had that kind of predictability in business trends at any time in the past, that there's no business that's energy intensive or carbon intensive is going to be around in a couple of decades. And similarly, those who crack the solutions to bringing everybody and to bringing all of society on that path, if they get there early, the opportunities are absolutely huge. The other advantage, obviously, we have is the resources. We have the wave resource, the wind resource, the biomass resource, the solar resource. We have the opportunity to really exploit the renewable energy issue in particular, and it's behoving on us, I think, to move quickly to capture those opportunities. One last point. There's a lot of debate about the path to getting out of carbon and the path to the green future, and some of it, is relatively simple. If you believe the numbers, the efficiency argument is pretty much a no-brainer. We've got to find ways to unlock that potential and get on with it. And the debate then moves on to just exactly how big that potential is and what are the solutions to unlocking it. When you get into some of the longer-term stuff, like say ocean energy, electric vehicles, and even things like grid upgrade and interconnection, that's when the debate becomes a little more heated, because there is a question now of what's our time horizon in our current fiscal climate, what's our willingness to invest for future returns. And unfortunately, in my view, there is a tendency to frame a dichotomy between some of the short-term needs and some of the long-term needs. One issue that often comes up is about the impact of the green agenda on energy prices now. And there is a tendency, I think, incorrectly, for people to postulate that the green agenda is putting up energy prices now. As it happens, if you look at the data, I don't think that's supported. But I do want to make a couple of points on that. One is that this goes way beyond meeting a 2020 target, and it goes way beyond a cost curve that represents carbon dioxide. The kind of issues we're talking about in the long term, be it electric vehicles, grid upgrade, interconnections, smart meters, is about many more absolutely urgent strategic imperatives. Getting out of our import dependence, getting into fuel diversity and hence more comfortable supply scenarios, enhancing the competitiveness of our existing businesses as well as our future businesses. And that's about investment and planning. It's about making decisions now that have 20, 30-year impacts. And you've seen from this curve, and you know from everything from power stations to interconnectors, we're talking about decade time horizons, not year time horizons. That is a call from our side to say, don't put off things that need to be done now that are for 2020 and beyond. Don't look at this curve and say, let's spend every spare cent we have on lighting and forget about some of the stuff on the right-hand side. There needs to be paralleling of short and long-term issues. Just to illustrate the point I want to make, I'll just show you one final curve. This comes from a separate analysis we have done recently on energy prices, and we now, twice a year, publish a benchmark of how energy prices compare in Ireland to the rest of Europe. And we do it by a number of subsectors and subsizes, and it's quite a detailed analysis. And lo and behold, we're pretty much the most expensive in most categories in Europe. Not in all, and particularly not in some gas categories, but in electricity prices in particular, and particularly from a competitiveness angle where it's most painful, and undoubtedly very, very painful, our electricity prices for business have risen very steeply in the last couple of years, and benchmark is very high by European standards. As you can see from the green line here, where using a typical mid-consumption band, we're about the third or fourth most expensive for electricity for medium business users across the whole of the EU27. However, when you map on top of that curve countries' dependence on fossil fuel for electricity generation, you see a very clear pattern that the countries that are most dependent on fossil fuel for electricity generation have the highest prices. In fact, that masked even a stronger effect, because some of those countries there with high bars of fossil fuel use actually have indigenous resources. So we are uniquely dependent on imported fossil fuels for our electricity generation, and that pushes our electricity prices up and will leave them up until we do something about it. The short, medium and long-term path out of high energy prices and out of the competitive pressures they are now creating is to get out of import dependence, to diversify our supply, and to move quickly on renewables, both for reducing prices now but also capturing the huge enterprise opportunities, export opportunities that go with that. And if I can just end on a final note, this curve for me makes a point very clear that calls that one unfortunately hears every now and then to do things like defer investment in interconnection or in grid or to defer the carbon tax are, in my view, short-sighted and simply not at the races. We're well beyond that point now. We've got to act on all dimensions of this. This cost curve doesn't tell us exactly what we can and can't do, but it reinforces two key points. We've got to act on pretty much every part of society, every technical opportunity we have, and it's going to involve all of society, but it represents opportunity. Some of it involves some cost. All of it involves transformation, changes in our lives, changes in our regulation, changes in our technology, but it's going to happen around us. We have two choices. We can follow or we can lead. Thank you.